Welcome to It's the Economy. Home sales in India are highest since 2013, but have been stagnating at the same levels for the past 18 months or three half-year periods. Importantly, affordable home sales is falling, but premium home sales is rising as a share of total sales. Hyderabad is doing the best in terms of volume of sales and in terms of price rise. Coming to office space is selling more and has grown 3% year on year if you take the Jan to June period, with Chennai showing the best sales. These are some of the salient takeaways from the half-year report on real estate from Knight Frank, the real estate think tank. Joining me now is one of the authors of the report, Gulam. We will also be joined shortly by Mohit, the Senior Director at CRISIL Ratings, who takes a close look at real estate. Gulam and Mohit, who will be shortly joining, welcome to the show. Gulam, you know, the data will come up, the table on half-year home sales. It looks like home sales in Jan to June 23 was almost identical to Jan to June 22 and July to December 22. Not much growth, although the entire period is better than the previous 9 years.
That's true. And as you started with, the numbers that we are looking at are in spite of whatever negativity overall and in the microeconomy and the global situation, in spite of that, home sales have continued to show the resilience. And that's the key point that we captured in the report. With, as you also rightly say, that the main outlook that we are looking at right now, majority of the sales have been shifting towards the mid to upper end of the market, and the lower end of the market is kind of slowing down. I won't say drying down. The CAGR growth rate of the lower market is shrinking. It used to be almost 50 or more % of the total sales over the bottom end of the market, but in last year or two, that has started shrinking, and that is the worry, because that always used to be the chunk of the market, large chunk of the market. So it's anybody's guess how long the upper end of the market can support the overall growth of this housing sales in the country. So we'll have to look for doing something to improve the lower end. But the interim, at least last 2 or 3 half-yearlies, while the numbers have been remaining steady, the upper end is the one which is coming to the rescue. Over to you, Latha.
No, take your point. That comes through in the various bar charts you have sent in your report, Gulam. But before I come to the affordable thing, which could be a huge worry, even the numbers, you know, it is 1.57 lakh homes sold in Jan to June 22, July to December 22, and Jan to June 23. One would normally expect a growth, isn't it? Last year, our real GDP grew by 7.1%. And if you take nominal GDP along with inflation, the growth is very good. It is like 15-16%. For an economy growing by that, you would expect home sales to at least show growth. That it is flat is a worry?
I would go with you, but as I said, it is also justifying, because the balance is disturbed. Upper end is actually making more wealth is evident right now. And that is what, while the transactions have been improving in the upper end, and perhaps that's what is explaining the question that you're raising. And that is showing all over in the key markets like Mumbai. In the half yearly, we've seen more than 40,000 apartments sold. One of the best performances, in fact, NCR. In last almost 11 to 12 odd years, NCR market was in dumps. It was not selling at all. But last 2 years, it has started showing good improvement. And 30,000 units sold in NCR is also a great achievement. So overall, the numbers are improving in a few markets. A few markets have not been doing so well. I would say Bengaluru had remained negative, Pune negative. But in spite of all that, the numbers are remaining steady. The macro numbers are looking the same. So that's the key, that the growth of the economy is perhaps fueling the upper end of the market, not as much to the lower end.
Yeah, that is a worry. But let's just put that report again on the half-year sales on the screen. Maybe that drives home the point. H1 of 22, H1 of 23 and H2 of 22, we have been selling about 1.5, 1.6 lakh homes. And this is the best since 2013. But you just look at the numbers, 2010 to 13, when real estate was really at a boom. Every month, every half year, we were selling nearly 2 lakh homes. So now, in spite of the recovery, 10 years down the line, we are selling 1.6. So we are nowhere near the peak of real estate sales. Let me invite Mohit Makhija, the Senior Director of CRISIL, joining us. Mohit, this was the main number from one of the big numbers from the Knight Frank report, that sales are very good if you compare it to the last 8 years. But if you're only reading the 3 half years from Jan of 22, sales have been more or less static. Would that be an observation you share, that real estate grew after COVID, but has kind of stabilized and plateaued for now?
So, to put into perspective, let's first look at what we believe this year is going to be, as in the fiscal 24. So we see growth coming from, the mid to higher end segment, because that segment, despite the increase in the interest rates, because that is the major change that has happened in the first half of this year, that segment has not seen the kind of, demand slowdown that normally we see when interest rates go up. This is, I think, because of the economic growth and the optimism that is there in the Indian economy, that segment is still pulling the entire sector up. We expect that, about 4 to 6% volume growth will remain in the current year. Despite the affordability getting somewhat hit, we believe 4 to 6% volume growth will still be a sustainable growth this year.
Okay. Well, let's keep this chart on the screen, the affordable, mid-segment and premium. Affordable has not been a bit hit. It has been rather hit, 21% lower. Gulam, that would be, you're saying that is usually the bread and butter segment? It usually provides the maximum number?
That's true. You see, when you look at the overall spectrum, very few developers can actually enter the upper end of the market. Only the very reputed, very good brands are there to cater to the upper end of the market. Majority of them are into mid to low end. So the shrinkage that we are looking at, the lower end, will hit the hardest of the industry, because in any case, the upper end of the market shall remain very, very restricted in a few markets like Mumbai, Delhi, and now even in Bangalore, Hyderabad, etc. But the share of that end is very, very limited. So even if you are catering or creating more inventory pushing into the market, you will not be able to sell. So the overall boundary condition of mid to upper end is something which is worrisome, because in spite of whatever you do, unless you improve your bottom end or mid to low end of the market, your volumes will not go up. And that's exactly what we have been worried about. And the report is very clearly showing that you need to focus on the mid to low end of the market now.
Okay, just a word more on that affordable segment, and let that thing come up again, that data. Gulam, the affordable segment is only 32%. It has fallen from 35% to 32%. So it's only 1/3 of the total sales, according to your report.
No, Latha, as I told earlier, this same segment used to be more than 50% of the market about 2 years back. So while market itself, the pie itself has grown, and hence perhaps the share could also have changed. But then in spite of all that, I would still want to believe that at least 50% of the transactions have to come from the affordable side of it to maintain the fair share of the pie. And that is exactly what. So while you're looking at 1/3 and just 2 or 3% of difference in last half yearly, but the overall, the share that they should always have is at least 50%, and from there it has shrunk from half to 1/3. And that indeed is the big worry.
Okay, I take your point, and I think your report goes on to say that Calcutta was the one city which always had more affordable sales, and for the first time, even in Calcutta, affordable homes are comprising less than 50% of total homes sold. But let me very importantly point out, Ahmedabad is the only city where affordable homes still occupy more than 50% of total homes sold. Okay, Mohit, now let me come to the other part which is doing very well, and that is office space. Office space, according to the Knight Frank report, the total sales was 3% higher than what it was in the year-ago period. You think this is an indication of a very robust economy, more office space?
Yes. In office spaces, unlike residential real estate, it works with a bit of a lag. What we have to realize in office spaces is that the demand that you see today, right, is a result of a decisions taken to expand workforce or to relocate business coming from developed countries to India. Decisions taken 6 months back, 6 to 8 months back, start to reflect now. So what we see is that the demand in the commercial space slowed down a little in the last financial year, and some impact of that was because some office spaces decisions were deferred which were taken maybe till September. You saw those reflecting in March 2023.
Okay.
But after September, when the effect of interest rates worldwide started to hit the economies, some of them took a decision to freeze some of the expansion plans. What we believe is that in commercial real estate, the demand follows with a lag. Decisions taken 6 months back have started to we see the impact now. And what we believe going forward, September 2023 onwards, we are going to see some of those decisions which were deferred to happen again. So you will see impact of that coming in the maybe end of current fiscal year.
Okay. Okay, that's hopeful. Actually, Chennai is the one that's shining. 100%, 107% increase in office space sales year on year for the Jan-June period, followed by NCR, which is a 25% rise, and then Mumbai, 9%. But it's a rather poor showing in Bengaluru, Pune, Hyderabad, not so bad. Kolkata also not so bad. Ahmedabad is really bad with a minus 59%. Gulam, any other observations? Commercial real estate, would that be a more promising space at all?
Sure. First of all, let me just put something in perspective. When you're looking at the percentage down, what also needs to be kept in mind is the base effect. Bengaluru, when it is looking like a bit of a negative, but then please understand, Bengaluru has remained the biggest market of offices across the country. So that 10% reduction that you look at the screen is still, the market itself in volumes is the biggest. So Chennai, when it is looking at 107%, the last same half-yearly period was very, very low. So this almost double, that jump has come about, and in spite of that, barely 4.5 million square feet compared to more than 7 million of Bengaluru. While NCR has been doing fairly well, it has one of the large share. Chennai's improvement and percentage-wise is purely because of the low base of the last same period. So overall, let's understand that these numbers need to be seen with the base effect. Also, Bengaluru continues to be the biggest market, and we expect it to, even this year, touch at least 15 million square feet of absorption out of roughly whatever 54, 55 that we may expect the year to close at, which would be same or slightly more than last year. So overall, the numbers are overall number, that 3% growth is very, very satisfying, because when we started the year, we had lots of concerns that the global the impact of the global economy would be shown on our market, which didn't really happen.
Gulam, I'm sorry I'm interrupting, because I'm trying to get another very important question to you. What about prices? In the residential space, launches are up 8%, even as sales have remained flat, home sales. So are we in for a period of stable prices, or will we see, how do you look at the price trends going forward? First homes and then office.
See, in case of homes to start with, the price rise has happened, and that has happened more in the upper end, and which is economy, pure economy, that if the volumes are high, the prices can go up. Affordable side, the prices haven't moved. So net, we are still looking at almost about 5-6% price growth, which is indeed there. In the low end, it is not happening so much. And in fact, in even regions, different regions are behaving differently as far as price rise is concerned. The upper end markets are showing a better price rise. So if you look at Mumbai, that's what indeed the point is. But the outlier is Hyderabad. In Hyderabad, every market, even the mid to low end market, has done well. So that price rise that you see in case of Hyderabad is showing that. In Mumbai, price rise is restricted to the upper end of it. The uber luxury market is where the price rises have been at least closer to double digit. But the rest of it is about 4 to 5% is what our observations are. So net the price rise will continue. It will remain at least in that 5 to 6% range, which is still lower than inflation, and that is all right. The important thing that we are looking at is in case of even office market, the price, the volumes, the rates, rental expectations per month have started going up. In places like Chennai and Bangalore, the IT-dominated cities, we do see the rental values shooting up gradually, and that is also directly related to how the office market is doing. So overall, we will see flat to increasing trend, both in office as well as residential in next 6 months.
Okay, flat to increasing. Yeah, you have pointed out that vacancies are falling. Mohit, I have only about 10 seconds for you. Any trend on prices you want to talk about?
Yes, on home prices, we expect, as Mr. Gulam mentioned, about 5% increase. As far as commercial prices are concerned, we expect it to be slightly flattish to about 2 to 3% increase because of the little bit sluggishness that we are seeing in the market.
All right. Gentlemen, thank you very much for giving us more color to understand the real estate space. A bit of flatness and even fall in the affordable segment, but made up by very good sales in the luxury segment. Don't expect prices to shoot up too much. About 5% is what experts say. Wrap up on Bazaar. Short Past is up next.